The Morningstar Wide Moat Barclays VC Index is a multi-asset class index that aims to provide stable returns across different market environments. The index creates a diversified portfolio by combining U.S. stocks selected based on the economic moat investment philosophy with a portfolio of 4 Barclays U.S. Treasury futures indices. The index seeks to enhance return and manage risk exposure by adjusting the portfolio's asset allocation on a monthly basis using techniques from the modern portfolio theory. To further control risk, the index aims to maintain its annual volatility level at or below 7% using a procedure called volatility control. The equity component of the index is a rules-based stock index published by Morningstar Inc., called the Morningstar Wide Moat Focus Index. It is designed to provide exposure to a portfolio of the most undervalued U.S. stocks with a wide economic moat rating covered by Morningstar's equity research team. What is an economic moat, and what is a wide moat stock? Here is the explanation from Morningstar.
The Morningstar Economic Moat Rating represents a company's sustainable competitive advantage. A company with an economic moat can fend off competition and earn high returns on capital for many years to come. Morningstar has identified 5 sources of moat. Switching costs are those obstacles that keep customers from changing from one product to another. The network effect occurs when the value of a good or service increases for both new and existing users as more people use that good or service. Intangible assets are things such as patents, government licenses, and brand identity that keep competitors at bay. A company with a cost advantage can produce goods or services at a lower cost, allowing them to undercut their competitors or achieve higher profitability. Efficient scale benefits companies operating in a market that only supports one or a few competitors, limiting rivalry. A company whose competitive advantages we expect to last more than 20 years has a wide moat. One that can fend off their rivals for 10 years has a narrow moat, while a firm with either no advantage or one that we think will quickly dissipate has no moat.
Construction of the Morningstar Wide Moat Focus Index. The Morningstar Wide Moat Focus Index selects wide moat stocks representing the best value as determined by the ratio of Morningstar's estimate of fair value to the stock price. Index constituents therefore represent the most compelling values among the wide moat universe, according to Morningstar analysts. The Treasury component of the Morningstar Wide Moat Barclays VC Index is an equally weighted portfolio of 4 Barclays U.S. Treasury futures indices: 2-year, 5-year, 10-year, and 30-year. The index creates a monthly rebalanced portfolio that combines the equity component and the Treasury component. This is called the index portfolio. Within the index portfolio, the combined weight of the equity component and the Treasury component may range from 0% to 150% any given month. If the combined weight is equal to 100%, this means the index portfolio is fully allocated to the equity component and the Treasury component. If the combined weight is less than 100%, the uninvested portion of the index portfolio will not earn any return or carry any investment risk similar to a cash position. If the combined weight is more than 100% and up to 150%, the index portfolio has used leverage to make additional investment in the equity component and the Treasury component. Each month, the index runs a process called mean variance optimization, which aims to determine the optimal weights to be allocated to the equity component and the Treasury component. The mean variance optimization process is based on Harry Markowitz's modern portfolio theory, which states that investors can maximize their expected return at any given risk level through diversification. For the Morningstar Wide Moat Barclays VC Index, the process considers all combinations of the equity component and the Treasury component, provided that the combined weight of these components does not exceed 150%. The volatility of each combination is calculated based on how volatile the two components have been and how they have moved relative to each other. All the combinations with annual volatility exceeding 7% are eliminated. The process selects the combination with the highest estimated return potential based on the assumption that the risk-adjusted returns offered by the equity component and the Treasury component will be comparable the following month. This combination will be the index portfolio for the following month. To further control risk, the index applies an additional volatility control procedure that decreases or increases the index's exposure to the index portfolio when necessary to maintain an annual volatility level at or below 7%. To achieve this, a target exposure level to the index portfolio is calculated on a daily basis. By dividing the 7% upper volatility threshold using the recent volatility of the index portfolio, subject to a maximum level of 100%. As a result, if the recent volatility of the index portfolio is below 7%, the target exposure to the index portfolio will be equal to 100%. If the recent volatility of the index portfolio exceeds 7%, the target exposure to the index portfolio will be less than 100%, and the residual weight will be uninvested. If the target exposure level calculated on any day differs from the actual exposure level by 5 percentage points or more, the index will adjust its actual exposure level to the index portfolio on the following trading day to match that target level. The purpose of adjusting the index's exposure to the index portfolio is to maintain the level of risk below the upper threshold limit of 7% as the market environment changes. The Morningstar Wide Moat Barclays VC Index combines a wide moat stock index from Morningstar with Treasury futures indices from Barclays. Asset allocation is adjusted every month using a mean variance optimization process, and an additional volatility control procedure is used to maintain annual index volatility at or below 7%. An investment in products linked to the Morningstar Wide Moat Barclays VC Index involves fees, costs, and risks. You should consult with professional advisors before making any investment that is based on the performance of the index. For more information on the index, please visit indices.barclays/moat.